I want to bring in Yahoo Finance's Akiko Fujita, joining us now for the next 2 hours of the program. And Akiko, all this going on in the background of really a situation, and I know we're going to get to the stimulus in just a minute with Jeff Smith, but the US-China trade situation and I guess just general tensions, let's call them, ratcheted up yet again over the weekend. And this an issue that sometimes has mattered to the market during this period, but really has been mostly overlooked. And it seems that today would again be one of those days.
Yeah, and this is, Myles, something that has gone well beyond, as you point out, trade tensions. We're talking about all-encompassing at this point, and yet here we are talking about the S&P 500 within striking distance of that all-time high. It's an interesting dynamic here in the market because you could argue that U.S.-China relations right now are at its worst that we have seen in years. And that's including during the trade discussions. You had the executive orders that were signed last week. You also had Health and Human Services Secretary Alex Azar over in Taiwan upsetting the Chinese. And then, of course, today you had those measures coming from the Chinese government today coming down in retaliation of the sanctions that were placed on Hong Kong executive Carrie Lam, along with others as well. So it's interesting to see that the market hasn't necessarily been rattled by that. One of the things we're going to be watching closely here going into the end of the week is that August 15th date. We do know that the U.S. and Chinese officials are meeting. This is kind of that first check-in on the actual trade deal, which, by the way, is still intact as far as we know. So that's something to keep watching as we go through the trading week this week.
And I think it'll also be interesting, Akiko, in the context of, I guess, Trump's broader electoral strategy. That certainly is kind of how the extension of the CARES Act or whatever is happening right now with stimulus is kind of running through that channel, right? It's like, here's the thing that I think people might like, so I'll try to do it by executive order or something. And to your point on those trade talks, we don't exactly know what's going to happen, how they're going, if they'll happen at all. But one can imagine that if there's a perception that some sort of readout would be election positive, that would result from whatever does or doesn't happen later this month.
Yeah, I mean, that appears to be the calculation, right? Right now, as far as we know, this has been a real concerted effort, not just from the White House, but from the State Department as well. We've heard from the Attorney General going after Chinese companies too. So this has kind of been an all-out blitz against China. And the thinking here is that we've got several months left to go before the election, but this is an issue that's likely to stick with President Trump supporters. Now, having said that, there's also concern of the miscalculation here that the president could maybe, in trying to get those votes, potentially trying to sell himself as being tough on China, may miscalculate this and sort of take the U.S. in a direction that's really going to be difficult to pull back even post-election. So I would argue that the risk here is still significant in the market, and potentially because of the other data we've been getting that's related to the coronavirus, there is a bit of complacency maybe kicking in, at least as it relates to the U.S.-China risk.
Yeah, and I think also when you look at the economic data out of China, it seems as if their economy hasn't been affected at all. And I think investors are looking at that and saying, either I guess that's the U.S. future, or either that means that trade tensions are fine. Either way, it seems like maybe it is fine forever. But it would seem, considering there's a global pandemic, that it's not in a definite state of affairs. But I guess we're going to see how this all plays